Okay, so let's have a look at the club account question for 2011, past exam question. So with these, we know that we need to calculate a couple of statements. So the first statement we have to calculate is a cumulative fund. The second one is income and expenditure. The third statement is your club account. And then you have a little bit of theory or advice to give to the club. So we know the cumulative fund is always on the first of the first. So we go to the start of the question. All our information is here to start except for 5 things. We need to add the loan. We need to add the loan interest. We need to include the bank. So if the bank's on the receipt side, it's an asset. If it's on the payment side, it's a liability. We need to include your investments. So we need to do a calculation on investments. And then we also have to include our levy for the previous year, which is down here. So 5 things that need to be included, as well as the information that we have here at the start. So we go through these. So your clubhouse, 250 is an asset. Your equipment of 75,000 is an asset. Your bar stock of 15,000 is an asset. And your bar debtors of 1,280 is also an asset. Your creditors then is going to be a liability. Your life membership of 24,000 is also a liability. The level reserve fund of 20,000 is a liability. Wages prepaid then. So we look at this diagram here. It's this diagram: expenses, income, due, and prepaid. So if it's an expense and it's prepaid, it's an asset. If it's an expense and it's due, it's a liability. So wages is an expense, it's prepaid, so it is an asset. And the next item then, subscriptions. So subscription is an income. So you go back to this table. So income, if it's due, it's an asset. If it's prepaid, it's a liability. So this subscription's due is going to be an asset. Then we need to include our bar account, our bank account is going to be an asset. Your loan of 30,000 is going to be a liability. The interest is going to be a liability. Your investment then is going to be an asset that we're going to do an adjustment on. And the last one then is your levy. So your levy then is going to, of this here for 2009, is also going to be a liability. So the items that we can put in straightforward are going to be your club account, your equipment, your bar stock, your debtors, your wage due, and your subs due, and your bank. Two workings we're going to have to do is your investment and your levy. We're going to look at them in a second. And then for your liabilities, then you have bar creditors, life membership, levy reserve fund, the loan. They're all taken straight from the account. And then we're going to do an adjustment then on our loan interest. So let's have a look and see where these figures are coming from. So your club accounts, 250,000 is coming straight from here. Club accounts, 250,000. The next one is equipment of 75,000. So you've got equipment up here, 75,000. Your bar stock, 15,000. So you got bar stock, 15,000. You have your bar debtors then of 1,280. From the question, bar debtors 1,280. Your next one, your wages prepaid. So creditor is a liability, life membership is a liability, levy reserve fund then is liability. So wages prepaid, we paid them for this period, so they're paid for, so we have the money, so it's going to be 400. You got your subs due then here, so that's income that's due to us for this period, so 500. It's going to be an asset, or it's due, so it needs to be paid, so it's our money, 500. Then the first one, then you have your bank. So your bank of 1,140. Then your investment. So this is where our first working is going to come into play. So our workings is going to be, you're going to look at the amount for investments, 1,500. Any investments at the start. And there's not, but if there's investments, you would adjust it. So if it was investment due, it would be from the previous period. If it was prepaid, it would be for this period. And then down here, investments due, 500, so that's due on the 31st. That's due for this period. So we're going to add that on to the 1,500. So you're going to have 1,500. Your income due, that's going to go into your balance sheet as a current asset. And the 2,000 is the income for this year. Remember, your income and expenditure account is like your profit and loss account. So that's going to be your income. That's how much we're going to receive for the year and the income and expenditure account. So that 2,000 is equal to 4%. So 1% is equal to 500. So 2,000 divided by 4%. So 100% then is your 500 multiplied by 100. That's going to give you 50,000. And that's where that 50,000 comes into play then for your cumulative fund here. Your bank is straight from the question. Your levy then, if you look at the question down here, the levy for the previous year. So it was 10 by 100, or 8 by 100, so that gives you 800. So I've put into a working here, working to 100 multiplied by 8 gives you 800. Your assets then, so when we look down through our assets, we'll have your bar creditors is the first one. So bar creditors will have life membership, or sorry, your liabilities. The first one is going to be your bar creditors, your life membership, so people who are life members of the club, your level reserve fund, so that's money that we get for a specific purpose. That's also liability that we owe back. So they're the three. So creditors 8,400, life membership 24,000, level reserve 20,000, and the next two then you're going to have is your loan of 30,000. So that's going to go straight in. And then we need the interest then for this period for the loan. So if we look at the loan we paid back was 33,960. So the interest was 3,960. It was paid back on the 9th. So 9 months are for this period, because it's 15 months is for the interest. So with 15 months interest, so you have to find out how much interest is for this period and how much interest was for the previous period. So 9 months for this one, and then 6 months then is going to be for the cumulative fund. So your adjustment will look like this. Your loan interest, the amount we pay back, 33,960. It's taken straight from the question here. The loan was 30,000. So the interest then is going to be 3,960. And then you have it for 15 months. So it's 3,960 divided by 15 will give you 264 per month. So 9 months is for this period. That's what's due. So that's going to your balance sheet as a current liability. And then this by 6 then will give you 1,584 that goes into your cumulative fund. So 9 and 6 will give you 15 months. So it's important to read the date here to see how much is it for this period, and make sure if it's at the end of the month you include that month, and if it's at the start of the month that you don't. And then you add up all your assets, add up all your liabilities, and you take one away from the other, and you get your cumulative fund. So you've got 394,120, 83,984. Take them away from each other. So the cumulative fund at the start is 310,136. And remember, put your heading in at the top, you get marks for that. And that's your cumulative fund completed with your adjustments.